What's going on? Welcome back to Financial Journey. So today we're going to talk to you about Rivian. I want to go over some of the current data points, break it down on what is really affecting it today, and go over everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. Starting off, Rivian is down 1.86%, $9.97 the low, 10.27 the high. Kind of high volume for the market being open 20 minutes. So 1.3 million shares being traded, 30.5 is the average. And these are all the transactions occurring on the secondary market above $100,000 so far. So very active. First thing, you did see a lot of selling. So a lot of this is exactly what did prompt that pullback. So at 836 matches exactly with this low. And then it got bought up at the same time. So a couple of big buys, 1 mil, and then a big sell, 1.56. So somewhat evenly divided, but there's a couple of things that's really affecting Rivian. So retail sales and initial jobless claims came in better than anticipated, but right now, the market seems to be very focused on manufacturing production month over month, which came in negative 0.4. Even though this isn't a data point that normally people look for or really look at, just there's a lot of hype around it just this morning. So in my opinion, that does signify that the market was really looking for fault, for a reason to really pull back. So it's not necessarily the best scenario. And then aside from that, when it comes to Rivian, there's a couple of things that does affect it. One of which is Tesla. So whatever happens to Tesla, good, bad, and the ugly, does trickle down to other EVs. But Rivian and Lucid, even though they're not in the same business segment, they usually are kind of related, if that makes sense. Only because they did start and launch at the exact same time. So a lot of people do kind of correlate the two, right? So if something negative is happening to Lucid, does kind of roll over to Rivian and vice versa. It's happened in the past, doesn't make sense, but that's how the market is. So Lucid did drop some pretty deep bombs yesterday. So they tentatively gave their revenue for Q3, which is significantly lower by roughly 60% from what analysts expected. So they're kind of assuming between 199 and 200 mil versus analysts were expecting 293. So big miss there. And Lucid also did drop another bomb, about $1.67 billion in dilution through various avenues. So a lot of that is translating to Rivian, especially that dilution aspect. That's like obviously a touchy subject with Rivian investors, is just how much Rivian is burning through. Luckily enough, they have a lot of cash on hand, but still it's something that affects Rivian. And as of right now, shorts though are returning around 61,000 shares. 16.91% of the free float is being shorted. Works out to be 123.75 million shares. Cost to borrow average is 0.74. Utilization is 64.1. And this is why I like to analyze this information, because by shorts returning and there being a lot of available shares, such as 1.1 million, if they really did see today was justified, they'd be increasing, but they're not. So I see this as rather optimistic, but needless to say, the technicals as well are one thing that's really bringing Rivian down. So popping over to IBKR, just looking on the technicals, is below the ALMA. Super trend is showing bearish, and even just looking at the 5100 200-day moving average is below everything. So Rivian's been breaking down for a while, and it's been one of those very difficult stocks to hold long term. And I get it. A lot of people say with a lot of these EVs, like it's going to be long term. Even RJ's last kind of fireside chat that he did, he even said that when we are thinking on business plans, we're thinking 2030 and above. So it's a difficult scenario. If you believe that, then so be it. Obviously buy the dip, do what you need to do, but the technicals and analysts are not the most optimistic. And so even the Elliott Wave technicals right now, it does have a pivot point of $11.30. So for as long as it is below that, then it is anticipated to hit between that 790 and 840 range. And for those of you that have been watching my channel, this has been very eerily accurate. And aside from that though, looking here, this is the latest analyst ratings. There was a couple that came out yesterday. So $3 hold by Barclays, Dan, who has a 40% success rating. You also had $12 by Truist, Jordan, and then a $11 Wells Fargo, Colin, who has a 48% success rating. So not the best. That's really bringing down this average. So as a consensus of everything right here, $16.80 is anticipated, and that is roughly a 66.5% upside. So yeah, I think in reality, maybe Garrett's from CFRA $8 sell rating might be on point. We'll just have to wait and see. But yeah, I think as of right now, it's just a very interesting scenario. On a side note, if you want all those analyst ratings completely for free, take a look at IBKR, link in the description below. But aside from that though, looking at options, 542,000 in calls, 469,000 in puts. 69% of all the options being done today are bearish, anticipating more downside. Of the call options that are being purchased, you see a consensus for it to be around that 1050, possibly even 11, and then puts are kind of pointing for it to be sub $9 by next week. So there was a very big 1,000 purchase so far today, and so that's 1,000 options, not the premiums, for October 25th. So more of a breakdown, but then again, options is just merely a sentiment, does not actually move the stock price whatsoever. But as long as big money keeps buying, I think that's kind of a good thing overall. So I just hit refresh. So there's one new one that just popped up. But aside from that though, right now with it at $10.10, so it is recovering slightly from the lows. It is trading between these 2 points, so this S3 and this S2. So $10.15 is going to be that next strong resistance slash target. And then $8.95 is that next strong support. Very wide gaps, so you have to anticipate a lot of volatility and continued volatility with Rivian, as I've brought up in the past. But the fact that it is trading between this S3 and this S2 right now goes to show that Wall Street is really seeing Rivian as damaged, because right now only stocks trading between this range is essentially damaged. So it is what it is. Let me know you guys' thoughts. As far as news coming out from the company itself, not all that much. Even on social media, they have gone somewhat radio silent. RJ was generally very active, but he's really toned it down. I don't know if that's just because of the upcoming earnings, just trying to be silent, if that makes sense. But yeah, let me know your guys' thoughts. Are you buying the Rivian dip? Are you selling? What are you guys doing with Rivian? And generally, do you think that possibly with their upcoming earnings coming right around the corner on the 7th, do you think that is going to be a good catalyst to really buy based on, and why? So this is just a little bit of a FYI for estimates. Currently 91 cents is that earnings per share among all the analysts. 10.06 billion is revenue, a little bit lower than the previous quarter, but then again, I think that was anticipated. And over the last 90 days, there is 6 positive and 9 negative revisions to the earnings per share. So still somewhat evenly divided, and that's resemblant as well based on a lot of the ratings I did say. So yeah, let me know your thoughts. 2 things I want to share with you though. Take advantage of this promo. It does give you 8 free stocks. Each stock is valued up to $2,000. Free is amazing, so take advantage of this. Then over and above that though, I did launch multiple different tiers on my memberships. So if you like the channel, want to support it, you can definitely do so. Or if you just want to buy signals on stocks and options, that's also another good opportunity to join as a member. And with that said though, appreciate all you guys watching.